$141,000 in 9 months, and I didn't use a single dollar of my own money. No finance degree, no assets on the line, just a good credit score and copying some public info from the internet. If you have good credit and you've been letting that sit there doing nothing, this is the video for you. I'm going to show you exactly what I did, step by step, with receipts. Let's get into it. So to start off, this is not financial advice. Everything here is my own personal experiences. And if you don't know what you're doing, you will risk losing money. So I want to make sure you guys are informed and doing your research before attempting anything. Starting off, we're investing, right? We're investing with $0. We're not using our own money. I went ahead and borrowed $35,000, but not in the way you would typically think. In order to get the most value out of borrowing money without paying crazy interest, high rates, things like that, we're leveraging 0% interest. And I know that sounds crazy, but I'm going to show you how banks are actually offering 0% interest very commonly, and that's through credit cards. Most traditional banks offer cards with a 0% intro period. So the first 12, 18 months that you have the card, you have 0% interest. You can have a high balance on it, and as long as you're paying that minimum payment each month, you don't have to worry about interest stacking up or the usual concerns when it comes to borrowing money. So right now, this is the stack I actually use, the credit cards I use to get that first $35,000. And honestly, you could do this a lot better and you can get a lot more money with it if you wanted to. But this was a bit of an experiment from me. So I used personal cards and business cards, but realistically, you should be using business cards whenever you use credit cards to invest into anything, because with personal cards, you're worried about your utilization being high when you use the whole balance. With business cards, the utilization does not matter. It's not affecting your personal credit. It's separate. So we're just using that good personal credit to open the door for good business credit. And then that business credit is separate from our personal credit. I'm sure you've seen how banks will give out 0% interest on furniture, different types of financing like that. And that's cool and all, but at the end of the day, that's a liability. That's not an asset that's going to make you money. And we're all about making money over here. So if you already have an investment idea and you want to leverage 0% interest towards it, I definitely recommend hitting the link in the description. We'll be able to help you out in accessing the most amount of capital possible using strategies that most people don't have access to. But getting back into it, okay, now we have that $35,000 from the bank. What are we going to do to make $141,000? I'm sure a lot of you guys have seen this tweet comparing Nancy Pelosi, who's a congresswoman who has a notoriously successful trading career, versus Warren Buffett, who a lot of people say Warren Buffett is the best trader, but with Pelosi, she blows him out of the water. And the best part is all of her trades are publicly documented. So even though there is a slight delay, 2 to 3 weeks typically, 2 to 3 weeks after she initially trades before the actual public announcement goes out, we still are able to use that alert to get major advantages in the market. And how we find her trades in the first place is it's as easy as Googling congressional trade disclosures. And here's the link right here if you want to use that. It will literally tell you what her exact positions are, a general estimate of how much money she put into it. But really the most important thing is which contract she's getting, right? We're not just buying shares. We're buying stock options. We're buying calls, which leverages, instead of only getting a 20% gain from the market, we're able to get much higher returns by leveraging contracts. To explain a little bit how stock option contracts work, there's the house deposit analogy. So we're putting $5,000 down to lock in the right to buy a house at $500,000. If the house goes up in value to $600,000, you don't need to own the whole house. You just sell your right to the house. So because of that, when a stock goes up 10, 15%, you're getting much more leverage on that return. You're not getting just a 10, 15% return. You're getting, in cases like this, double or triple what you invested. Most people use indicators to determine why they even want to go into a trade in the first place. So in this case, one of our indicators was Pelosi making these entries. When Pelosi buys calls, 9 out of 10 times they are going up, and they're going up a good amount. So we use that as our initial indicator, but we don't just stop there. We don't just copy her and buy at the same price or a little bit more than her. We are getting them at deep discounts, especially during this specific instance when I bought these calls during the tariff fears when the market was dumping. I was able to get these contracts at a deep discount, so 50% off what Pelosi was paying. So that means I'm able to stretch my buying power further. I'm able to stretch my money further to get more contracts. I'm just getting more value out of it, better return on investment. So let's say in this example graph right here, let's say this is where Pelosi bought her calls. We waited until the market dipped. We waited until there was fear in the market and prices were cheap to actually pull the trigger. So she bought in December and she alerted the trades in January. And I didn't fully start buying until March and April when the market was in complete fear. Everyone was selling. We were getting deep discounts. And because of these discounts, we were able to get riskier contracts for very cheap that if Pelosi even went just to break even, we would already be doubling, tripling our investment on it. And those specific ones were these $200 call options. Nancy Pelosi's original entry was $150 calls. So she was predicting the price of Google would be above $150 at least. And because the market was in such fear, we saw that not only those calls were going to do good, but we saw that why not get $200 calls as well? So we got those $200 calls and ended up having a 1,400% return on them. And this wasn't like I'm day trading. This isn't I'm worried about the market's individual move. I bought at a discount and then I just held. I didn't spend time looking at the markets. I didn't spend time debating if I should sell or buy. None of that. I let it sit and just saw the headlines when they came in when the market kept going up. And realistically, a lot of people would have sold here. I was down a few $1,000s and there was fear all across the market. There was people terrified that they were going to lose everything because of these tariffs. I'm sure you remember. And I was cool as a cucumber. I wasn't worried. I knew even the worst market crashes tend to recover within a year. In this example graph, you see 2008, one of the worst possible markets that people can remember. Things rebounded in less than 12 months. The same went for COVID. The same went for the tariff fears. I knew that this fear was unwarranted and that the markets are going to keep climbing. And that they did. Across the board, we had an okay return on Amazon, 25% on my investment there. Google, 1,400%. 1,400%. So these contracts went from, if I remember correctly, they went from $600 a contract to over $14,000 a contract. It was an insane return on investment. And of course, we diversified a little bit. We had other Google contracts, 273%, NVIDIA contracts, 100%. So that's double your money. And VST is to be made when others are fearful. You take calculated risks. When you take calculated risks, when others are fearful, that's when you're going to have the best return on investment in short amount of time. This all happened in 9 months. Most people get a 4% return on their savings account over the span of a year. And meanwhile, we're getting a 1,400% return on investment. That's the beauty of strategy and leverage. If you have an investment strategy that you know already works consistently for you, whether it's e-commerce, real estate investing, or any other type of business, and you want to use 0% interest credit cards to leverage and maximize how much you can scale from it, I definitely recommend checking out the link in the description. We can get on a free consultation call and see how we can help you get those high limit credit cards to build your business. And if you're not ready, and if nothing rings a bell quite yet, I definitely recommend you should subscribe. I'm going to be dropping more free game likes weekly. There's a lot you can do with 0% interest credit cards.